it's the margin that's important, but determining the margin is difficult. And also, because this is such a competitive business, the industrial minerals business, having people actually tell you what their costs are and what their prices are is extraordinarily difficult, because they're regarded as commercial in confidence. There's no, and this was something which was brought home to me a number of years ago when we looked at increasing the reporting requirements for industrial minerals and aggregates, for instance, in the JORC code. And all the major companies said, well, hang on, there's no way we're going to put our costs in a public report and let all the independents know where we sit so that they can come in and undercut us. So confidentiality on pricing is very important. And you'll notice that there's quite wide ranges in prices in that TerraTech information because of that. I don't want to signal their actual position, which makes it difficult for the investor.
So what are we to do? I mean, apart from ask lots of questions about what their margins are or what their costs are.
And you're probably not going to get them to give you a specific answer anyway.
So the only thing that we can go on, presumably, therefore, is last year's financials to see what their margins were.
Which is difficult if you're an IPO and you're not yet producing. So it is a difficult area.
Right. So what other areas then could or should we be looking at in order to get a better handle on whether this is a company you'd want to invest in?
Well, I think the things that you can look at is where they're located and where their markets are located. That should be pretty transparent. And if that geographical situation is satisfactory and there's good transport routes and reliable transport routes, and you can look at the transport cost and say yes, they're going to be relatively cheap, then that would attract your interest. And then it's a matter then of establishing from their raw material, can they produce the product that's being required by the market? That gets a little more difficult, but in an acquisition project, somebody could certainly do due diligence on that company to satisfy themselves that was correct. For a normal investor, a little bit harder again. But looking at the geography and the market and the transport is something that you can do.
Can we generalize that? For example, serpentine producers have higher margins than marble producers, for example.
I now understand the question, which is even more embarrassing than not, because I'm afraid I can't give you an answer, and I think I fall back on the old geologist answer. It depends, because there will be a range of margins within each of those commodities. Yeah.
You can't generalize, really.
I don't think I can generalize, no.
Isn't that interesting? Yes, now we come to the gentleman in the blue tie. Hello.
Yeah, my question is also on margins. So for the cost of extracting the deposits, I assume that the transportation cost is huge and also the extraction cost is huge. So in terms of, let's say, 100%, 100%, how much percent would be like transportation, and how much would be the extraction, and how much would be a decent margin for a good to invest company?
Down to 2 decimal places, please.
Did you have a feel for that? No. And again, I think it depends, but my, because my feeling is that the industry's not, because it's so segmented and it's so many different places and using so many different mechanisms. It is very difficult to generalise. But I wouldn't have thought that the margins are particularly high, and that's because there's so much supply and such widespread demand that there's no we've got the product, you need it. I mean, there's no situation that I'm aware of like there was in iron ore 2 years ago, where we've got the iron ore. If you want it, you're going to have to pay market price, and look, it's going up. And so the iron ore price went up and up, and now we're in the opposite situation. That's not something that happens in the industrial minerals scene to the same sort of extent. And so that leads me to think that the margins are not particularly great.
Plus, your slides earlier mentioned relatively low price, one or two slides, which means I have to ask you, Peter, Why does anybody go into this business?
Well, people go into it because there's a demand for it. You know, we're building and building and building. You know, I come to Singapore and joy fills my heart to see all the cranes in the sky, because that means you're consuming the minerals that the mining industry produces. So there's a demand for it, so there has to be supply. If people said, oh, it's not worth it, we won't do it, the demand would still be there and the price would go up. But that's not happening. So the supply, to me, is clearly meeting the demand at a reasonable margin. So it's not a boom and bust minerals cycle in industrial minerals.